Hi there, welcome to Markets Tomorrow on a fabulous day, fabulous third straight day for the markets. I'm Neeraj Shah.
Hi everyone, I'm Wwatch, and of course it was certainly a splendid day for the equity markets. So we'll be getting on board our experts to talk about the road ahead. We have Saurabh Mukherjee, CEO Institutional Equities at Ambit Capital, Sandeep Vakle, founder and CEO at PowerMyWealth.com, and Neeraj Diwan, Director, Quantum Securities. Saurabh, we'll start off with you. What's the sense that you're getting? Because a lot of experts are saying that now 7,000 is actually going to be the floor of the Nifty. Do you think that's being a little too aggressive, a little too optimistic, or you think it's time to trade with caution?
I think once we go through 7,500 odd on the Nifty, around 24,500 on the Sensex, once we go through those levels, I think that's when I'll start getting cautious. At these junctures, I don't think there's any ground to particularly worry about the overall level of the market. I simply don't think it's worthwhile worrying about the overall level of the market now. It's not as if valuations are particularly challenging. Neither is it the case that the bulk of the FII flows or the domestic flows are behind us. I really don't think the overall debate should be about the level of the market. That does look likely to rise by another 6-7% quite comfortably over the next month or so. The question is, what should one buy in that context of a fairly euphoric market, a fairly optimistic market? What are the places, what are the stocks to buy? I think that is I would say the more interesting debate.
Neeraj, we spoke maybe 7 or 10 days earlier, and you were saying that there could be a sharp up move that could come in if the results were favorable. My question is, does this rally have more steam, or has it been too soon, too swift, and therefore we might see a correction irrespective of the outcome on May 16th?
Yeah, good evening. I think definitely the outcome on May 16th is very important, but as the trends have been showing, and as we saw from the trends of the earlier opinion exit and the actual results which came in 2009 also, normally the trend is followed, though the numbers might not be matching with what people are predicting in the exit in the opinion poll, but the trend is normally followed. So seeing the trend, you might even have a better count for the NDA. So if that trend is being followed, I think the rally should continue. But the rally, May 16th might be one, based on the results, May 16th or 19th, you might have the continuation of the rally, and you might go close to the 7,500 figure which people are talking about. But I think now from these levels, one needs to think of taking levels where they have to book profits. If you're a short-term trader, if you are playing for the event, I think this time is coming where you can book some profits now in the next 3-4 trading days. But if one is an investor in the market, I think if you are staying with quality stocks, stay invested, because as we've seen, if a new government comes and it has the right sort of policies, then 1 year down the line, market will be even better. Market will be even better by 10-15% from where it is on the election result day. So I think investors should hold on, but someone who's playing for the event can take some profits off the table, and still, in this, after this move also, there will be ideas in mid-cap stocks which people start looking at once market consolidates, making a level of 7,500 or wherever the market is on the election day results.
Sandeep, based on your technical readings, would you concur somewhat with Neeraj that if someone is playing for the election event, that now would be a good time to book profits?
Absolutely, Avan. I think 7,200, 7,250, the rally can fizzle out. When I say fizzle out, I don't mean to say that there will be a one-way crash. There can be some correction, there can be profit booking by players who have already bought in at 66, 67, 6,800. So in that sense, some profit booking can bring the Nifty down to 6,800, probably 6,700. But by no means can one say that it is over and now we will go down to 6,200. I think 6,600 has become a base, and we are now firmly in the 66-72 bracket. And I don't see that letting go by the bulls, come what may. I mean, even after the result, whatever positive or negative, I think 6,600 would hold. We will consolidate in that 66-72 band for probably a few weeks or months, and then the next leg of the rally resumes, which could take the Nifty well beyond 8,100, 8,200. Now this is a view over the next few months or so. So very, very clearly in a bull range, and I don't think that as an investor one should worry about. Yes, as an F&O trader one should definitely, does make sense booking profits nearer 7,200 before Friday, that too. As a position trader, be ready to buy on declines. Now how much declines one has to wait and watch. I don't see a decline below 6800, worst come worst 6650 or so.
Sandeep, run us through your chart recommendations. So something like a BHEL, which was one of the top gainers on the Nifty, a good 10%.
Well, BHEL has been a very clear outperformer over the past few weeks, 3 to 4 weeks. We had a buy at around 185 or so. And as a trade, we have recommended booking profits at 210 or so. But even at the closing of 218, 219, I would say there is some more upside to the tune of 235, 240. Possibly on an outer side, given some more time, even 260. So I would buy BHEL as a position trader with a few weeks to a few months horizon on every correction or every declines to 210, 25 with a stop loss of below 195 and a target of anywhere between 240 and 250.
Neeraj, just wondering, the market is churning, I mean, taking turns in terms of the large cap performances. If there was banking and cap goods that did very well, oil and gas has been consistent throughout, and now even IT shown in the session today. Where in the large cap space do you still find merit to invest into for the short term?
I think for the short term is a very difficult thing to say. If you're just playing for the event, which is just 3-4 days ahead, it's very difficult. But if someone is talking about 6 to 9 months also, I think PSU banks selectively can still be looked at. You got excellent set of results from Bank of Baroda today. I think State Bank is one which even after the rally is not very expensive. Even that can be looked at this. I think some of the auto names like a Mahindra & Mahindra can be looked at even at these levels. So there is value which is there, stock specific rather than sector specific, and I will play for these even at these levels. If one were to invest for 6 to 9 months, if one is going to just look at 1 month ahead, then maybe you can avoid this for the time being and wait from some consolidation in the market.
What exactly it is you're expecting from a Tata Steel as well as the overall metals basket in general in terms of a move?
I think metal basket also will be more stock specific kind of action. I think still the China worries are still there, but there is one possibility of investment cycle improvement, or starting again in our country, and then the economic uptick which can happen, which will benefit some of these metal companies. So I think a Tata Steel kind of a stock can be a clear beneficiary. JSW Steel is doing well and can continue doing well, the kind of capacity that they have. So I would be positive selectively on the steel counter, so particularly Tata Steel and JSW Steel.
Okay, but talking about not necessarily tomorrow, but over the course of the next 6 months, sort of which names come to your mind as real true wealth creators in this leg of the bull market?
I think we've discussed this before on your program. I think the one sector that we are looking at with high amount of hope is light industrial exports, and especially the auto sector from an export perspective. As we know, over the last 10-20 years, India has become an IT and pharma exporter of some prominence, but we really haven't had a manufacturing export sector. My reckoning is if we get a new government and the new government pushes through reforms, lowering food prices, lowering inflation rates in our country, that in turn leading to the RBI cutting rates, reforming the Land Acquisition Act, reforming labour laws, I think we've got a very good chance of becoming a competitive exporter. If the rupee stays between 55 and 60, combine that with the fundamental reforms to the country, we've got a very good chance of becoming a large manufacturing exporter. And if that comes through, I think auto as a sector can really blossom. That's the missing piece of our economy, the fact that we aren't a manufactured goods exporter. And if that piece comes through, stocks like Bajaj Auto, Ashok Leyland, TVS, Eicher, there's a whole clutch of names there in the auto ancillary sector that could prosper mightily. There's a few in capital goods, but by and large, India's manufacturing prowess, I think, is likely to come through in auto. And auto exports is a theme we're looking at very closely. A lot of it, I confess though, will be contingent on what sort of reforms we see from the new government.
Neeraj, what is your sense when it comes to the overall cyclical basket? Do you think that we can see continued and renewed interest coming about within this space?
I think so. I think there are still pockets where it is not really very expensive. So I think still, cyclicals will continue doing well. You might get that odd consolidation phase. You can have those 4-5% correction in the market. But as a trend, I think over the next 1 to 2 years, cyclicals will keep on giving you money, and I think you stay with quality there, and there's a lot of money still to be made there as an investor.
And there was some traction, Neeraj. I'm just asking you where your trading had. There was some traction that we saw in the Adani Group stocks in particular, in addition to AD, AG. And a lot of people are saying this could well be the start. Though I must admit that the stocks have rallied quite a bit in the last 12 months. Would you bet on any of these?
I think ADAG Group, I think Reliance Capital is one stock, which according to me is not getting the value which it deserves. And the equity sum of parts also, insurance businesses there, mutual fund investments. I think with the investment cycle improving and stocks doing well, I think this company can benefit, and with insurance also going ahead, can continue doing well. So this is one stock in the ADG group where even at the current levels as an investor, I think one can put in money. And as far as the Adani Group stock is concerned, I think Adani Power is one where I think a lot of focus can come back into power, where investments had stopped, people are not putting money. There were issues regarding coal. I think a lot of these issues can get sorted out going ahead, and Adani Power can be a clear beneficiary going ahead. So these two stocks from these two groups can be looked at for investment even at these levels.
Sandeep, let's talk about the overall cap goods / infrastructure basket, which gained a lot of traction. IVR, CL, Adani Ports, GMR Infra, Rail Infra did fairly well. Any names that would stand out on the charts according to you?
Well, I would choose a Rail Infra if at all I have to choose from this basket. But it has moved up quite a bit. At a level of 588, 89, I would wait for corrective levels up to 580 or so. That would be the right level for me. 580 to 570, that range. And I would talk of a move beyond 615, 620.
Let's find out what the dealing rooms are chatting about in terms of individual stocks after seeing such a stellar rally for the last 3 days. Yatin joins in from our research desk with the list. Yatin.
Well, Avan, Tata Communications is something that dealers are watching at this point in time. Of course, we had the results which came in a few minutes after the market closed. But we have the company which has reported strong operating results. If you look at Tata Communications, they have, posted a consolidated EBITDA of close to 780 crores. That was almost 50 crores more than what the analysts were anticipating. And also we have most of the dealers which are expecting that tomorrow's session, the stock could touch levels of 300. So this is one trading pick that they are talking about. Also, Shakti Pumps from the mid-cap space is something that dealing rooms have been watching out for. Of course, the stock has moved significantly higher in the last 3-4 months, but they are expecting in quarter 4, 25 to 30% kind of a profit growth is anticipated for Shakti Pumps. Of course, they have been doing really well as far as the agricultural pump segment is concerned. And dealers are expecting that the stock in the short term could outperform the markets by 15 to 20%. So this is one stock wherein they are recommending a positional buy.
Thanks for that, Yatin. So those are a couple of stocks to watch out for. 5.5% up Shakti Pumps, and actually made the move, a large part of the move in the last 15-20 minutes of trade today. Okay, Neeraj, I'm sure you and your clients have been very happy with the rally recently, and if everybody is to be believed, with a stable government, this may continue. So in that bout of happiness, give our viewers a stock that they can buy into, not a large cap name, that's the easier part. Give us a mid cap name that they can buy into from either a 3-month, 6-month or a 1-year perspective.
Yeah, one of the recent buy report that you've taken out is Ahmednagar Forgings. This company come out with the quarterly results also last week, which were very encouraging, and they were in line with what, even better than what we thought they would be doing, and they have gone through a recent capacity expansion also. And this stock has definitely moved in by 20-30% recently, but I think this still has a lot to go from these levels, because as per our estimates, this is September ending company will do about 50 rupees EPS this year, and stock is at 200, and they would have further 10, 15, 20% improvement next year on the earnings. So I think this is one which can give you decent returns from these levels.
Neeraj, I distinctly remember you recommending SRF on ET Nav. It was, I think, sub 300 then, and then it's done very well. The earnings trajectory has been good too. What's the view on these chemical companies now, particularly SRF?
Yeah, actually it was 225, I think, SRF, and it started doing very well after that. But I think The stock has run up little ahead of valuations, so chemical division is doing well. This is the only company which has a lot of patents in this chemical division, and even the packaging unit that they've set in South Africa should start adding from this quarter. So for an investor, even still there is value in this stock, though in the short term it's definitely run up a lot. But for a long-term investor, still I think the improvement in chemical division will keep on happening, and even packaging will start contributing from this year onwards.
Sandeep, your top trades?
A buy in Adani Enterprises, stop loss of 460, target of 505, and a sell in a Dr. Reddy's, stop loss 2645, target 2540.
Now, Saurabh, one pocket which has really emerged in the last 2 to 3 trading sessions, it's been oil and gas. What do you think the prospects are for this sector?
I think I would be cautious there, really. I mean, it's such a regulation-driven space. You're perpetually waiting for announcements from Delhi about whether it's going to be $8 or not, and then there'll be relentlessly ongoing streams of disputes and arbitration. I really would be cautious about the whole space, including the PSU plays plus RIL. Yes, RIL has done well as a stock over the last few weeks. We don't have a stance on it. We cover the stock, but we don't have a stance on it because we don't have as much visibility on the regulatory drivers here that we would like to. And hence, if you have a strong rally here, I would say it's worth taking profits here. These are large companies. They're intensely driven by regulation. I don't think it's obvious to me that the new government that we'll get, or I don't think it's obvious that a month hence we will have an $8 gas price, and premised on that, I would be very cautious about expecting these stocks to continue rallying.
Okay, Sandeep, a quick word on 2 recommendations. One of them, Adani Port, the other one being Z Entertainment, which was something that you spoke about yesterday. What's the update on these 2?
Well, Z Entertainment has disappointed. It is corrected, but I would still hold on as a position trade. As an FNO trade, we did book some profits in the morning. Some kind of a loss of momentum, but the trend is still intact. Adani Ports, I would buy it on any bit of a correction towards 220. Probably even at the closing price, I would buy it. I mean, I am that happy with the pattern. And it's cleared a very important resistance at around 215 or so. So any move towards 220, a great buy. I would talk of a target of somewhere around 240 or so. So a clear 8 to 10% trading upside, even from the current levels.
Okay, that's a call coming in on 2 of those stocks. Gentlemen, we'll completely timed out right here on Markets Tomorrow. Thanks so much for joining in on the show.